as well get started. I want to thank you all for coming. Welcome, welcome, welcome. And tonight we have a very special guest who I'm sure none of you have ever met. Because he's a PhD, Dr. Oren Litwin from Washington, D.C. area. And he is an adjunct professor at the Annapolis Naval Academy and a research analyst for the Middle East Forum and an associate what for R Street?
Associate fellow for R Street.
Associate fellow for R Street. So with great joy and
Pride.
Yeah. He's also my kid. So, for those of you who don't know. But anyways, Dr. Oren Litwin.
It is an odd sensation a little bit to be standing up here in this office, given how much, how many times that I would be one of the staff, helping other presenters do their thing. But it's interesting. And I'm very glad to be here tonight to really help, because this election is unlike any other election we've had, certainly in the last several decades, and it really is one of those. It has the potential to be, has a very strong potential to be one of those history-turning, pivoting elections, and to help us understand what that means for us, really as investors, and what we as investors can anticipate about all this. That's, I think, what we're going to focus on tonight. Now, I want to start off by saying, this being an election year, passions on all sides are running high. We all have our very strong preferences, I think, or most of us have very strong preferences as far as which candidate we would prefer to be president. This presentation is really geared not so much for advocacy or justification as to explain and to understand. And with that intent going into it, my hope for myself is that I'm not going to get into any partisan arguments, and I hope that that you consider that something worthy to aspire to also in your questions.
No fighting.
Right. Yes. So play nice in the classroom. So this is so the presentation is titled "The Rise of Populism," because really that's been the key theme animating this whole election. Because if you think about it, who would have thought even a year ago that the state of the race would be as it is today, with Trump and Cruz on the Republican side, with Bernie Sanders fighting Hillary Clinton almost to a draw, at least until very recently, on the Democratic side. No one, I think, would have anticipated that at all. And really, the key factor there is that's motivating all of this upheaval is populism. So what do I mean by populism? So the populist impulse has been something that's shown up in American politics a few times in our history. The last time that it was very powerful was really in the 1890s or so. And even though the details were different, back then the populists were trying to break up the banking monopolies, or rather the railroad monopolies. Because the railroads were overcharging the farmers, and the farmers were not able to get their crops to market affordably. And today there are a number of very different issues, and yet the fundamental claim and the fundamental problem is the same, and that is that there are powerful interests who have too much influence in Washington and are using that influence to victimize the sort of blue-collar, salt-of-the-earth American. And that's what's motivating this. And to give you an idea of what basis there is for that, let's take a look at this chart. So, I'm sorry for those who have trouble seeing, it's a little small, but this breaks up the American workers into 5 quintiles, 5 slices of 20%. So the top 20%, second, third, fourth, bottom 20%. And it charts their average household income for that quintile in 2014 constant dollars, so it's adjusted for inflation. Starting in 1966, going all the way to the end of actually 2014. And you can see, it's a little hard to see some of the dynamics for the bottom quintiles just because the range of the graph is not very large. But you can see how in large strokes, the bottom quintile and the second quintile have pretty much been stagnant over this entire period. While the third quintile, the fourth quintile, and especially the top quintile has seen quite a lot of growth as far as their incomes over time. So there seems to be a divergence in the fortunes between, you know, the top 50 or 60% of the country and the bottom 40%. And you can see this even more clearly if we go to the next slide. So I've picked out a few data points from that graph. So in this column, you've got the each fifth's income in that starting year of 1966. And so the highest fifth was making over $100,000 in inflation-adjusted dollars. The bottom fifth was making about $15,000. And of course, there's going to be variation even within these, because a fifth is a pretty large slice, but still. And then you compare that to the year of the high watermark. So I wanted to identify in this whole data series, when was each of these slices doing the best? And you'll find there's a difference, because the top three quintiles had their high watermark around 2006, 2007. That was the period in which they were making the most income. Since then, you know, you went into the real estate crash, which led to the financial crash, which, you know, wiped out a lot of people. And even those at the top have not fully recovered from that, but the extent of the decline is not especially large, especially for the very top. So you see the top two slices, it's about 1.5 or 2%. Middle slice is about 5% from their high watermark in 2007 to their income in 2014. So they've lost some ground, but still they're pretty much holding their own, more or less. Back here, the bottom two, especially the bottom fifth, these two, you see something very different is going on. Their high watermark was not in 2007 or 2006, but actually in 2000. So even while these higher tranches were improving in their income, the bottom 40% was not. They were somehow stagnant. Even from their high watermark in 2000, the bottom 20% has lost 17% of where it was. So right now, the income for the bottom fifth is about $16,000, which is only marginally better than the $15,000 they started back in 1966. So, and you compare that to, say, the fourth quintile up there, it goes from 63,000 to 103. So they've increased by 60 or 70% in that time. And of course, the highest fifth has almost doubled its income over that time. So those at the top, and by top I mean the top 50 or 60%, not just the top 1%, have been doing better and better over time, on average in general, and the bottom 40% has been stagnating. Not to say that populism is entirely a manifestation of these bottom 40%, because there are certainly people making more than that who are in agreement with this idea of sort of a populist uprising or populist upheaval. But the key there is that there are large segments of the populace that are actually suffering right now.
Wait a second, I have a question.
Yes.
That highest income, does that mean ever throughout all those years, or does that mean the highest for that quintile? I don't, what is it?
It is the highest throughout the whole series.
Ever.
So for example, for the highest fifth, their highest income was in 2006. That was their high watermark. And that income was 220,000.
Okay.
Yes. Yes. Michael.
Do you, now, has this been taken apart in segments to know, is this investment portfolios? Is this income portfolios? Is this?
I got these numbers from the U.S. Census. I believe it was income.
Really? Okay.
So not investment. This is not about wealth. It's strictly income. Yes?
Okay, so how does that figure into people who were working at McDonald's in the 1960s but working in a Boeing in the 1980s?
Okay, so you're asking, well, okay, so we're comparing quintiles right now, but what about people who change from one quintile to another?
That's what I'm saying.
Right. How does that, as I understand it, that would complicate the statistics a little bit. in that it wouldn't really reflect a single person's fortunes throughout these periods. But even so, you can still say that those kinds of jobs that were in the bottom quintile back then are not paying any more now than they were then, even while other jobs have been doubling or nearly doubling their salaries. So you can at least say that much. Yes?
Okay, in the graph there, what jobs are considered for the bottom quintile and what jobs are in the second one, like McDonald's and like farmers, where would they fit?
So specifically I couldn't answer that question just because I haven't looked at the breakdown.
Okay.
In general, however, so the United States has a lot of comparative advantages in jobs requiring a lot of generalized knowledge. So college education, things like business consulting, computer programming, jobs that require synthesizing a number of different domains like biotechnology, and anything like that requires a large domain of generalists who are comfortable with sort of academic learning and applying that learning. Whereas, in places like Western Europe, they've got very strong, they've got sort of parallel tracks where they've got the professional track and then also the vocational track, so you can learn to be a machinist or a welder or things like this. We have those kind of things in the United States, but not as much as there were. Shop class has been almost eradicated from high schools. And more than that, the pressure put on students to go to college has gotten quite a bit higher. So there's this idea that if you don't go to college, you're a failure. There's not a sense that there is dignity and respect and actual wealth to be had even in these other professions. Even though a good welder or a good plumber makes a lot of money, that's not what's being fed to the students. And so the result of that is that the kinds of professions that require good, generalized, well-educated workers do very well in the United States. And the ones that require a lot more specialized personnel are actually leaving to places like China, where China has been ramping up its manufacturing capability quite a bit. And that's not necessarily, well, we'll get to the whole free trade issue in a bit, but so you're seeing there's actually this divergence between different segments of the populace. And part of that is because those on the bottom, so to speak, don't have the same opportunities available to those who did well in school, so to speak. And you can see that most starkly in rising suicide. So this isn't a great chart just because it only has 2 data points, 1999 and 2014. But it still illustrates the point because the rate of suicide among different groups in the United States has gone up, something like 60% over that time. And the highest increase in suicide per capita is actually American Indians, and just magnitude in general, it is middle class in the sense of middle age in the sense of 50 to 60-year-old white men and women. And most people who try to understand what's going on here emphasize the rising rates of drug addiction within these communities, especially in sort of middle America, and also the declining economic opportunities there. So there are serious societal problems at work, and the attitude is that neither of the 2 major parties has really been addressing that. And so there's a sense that there needs to be something else. And if the sort of conventional politics are not going to provide that, then you need alternative politics. And now on the other end of the spectrum, you've got the education, the problem of student debt in education. How many of you heard of the student debt problem?
Oh, yeah.
Yeah, it's talked about quite a lot in the media. This idea that many college students are not able to afford their schooling, that it's draining the resources of the parents, draining the resources of the students. Then they come out of college and they're not able to find jobs that are able to service their debt. And you can see how it's a little blurry, but so this starts in 1992. Average debt at graduation for a college student is about $10,000. Over on that side of the chart, it gets to about 2014. Average debt is up to about $40,000.
So
yes.
So the ratio of that, because now we're saying that the educated populace has an opportunity that the uneducated populace does not. But therefore now, once they're coming out, they can't find employment to cover the educational cost.
Right.
So therefore, what's giving the other top percent that cutting edge?
So for one thing, when I stated that all college students are coming out and not able to find things, I was overstating it a little bit, because I'm just sort of at this stage I'm just mimicking what the news media have said about these college students coming out and not able to find jobs. Many large portions of them cannot, but that's but debt is actually concentrated within a couple of different groups, which we'll talk about in the next slide. Many of the students are able to find jobs that are capable of financing their debt, especially if they're in something like technology, computer programming, medicine, something like this. Yes?
So I'll use my wife and I as an example. We have a daughter at Boston University, so we took out a total of $60,000 to pay her in loans. The way the universities do it now, it's not the same as when I was in college. They don't look at me and say, oh, look, we have free money for you, here's some loans, and they're student loans, and they're postponed until you graduate. Now, they look at the parents. Even if the child is not declared in your taxes, is independent, they don't care until age 26, they still look at the parents' income. And so, therefore, my wife and I were required to take out student loans, but in our names. And the interest rate starts accruing right away. It's almost $10 a day for interest rates on those loans. So even if we told our daughter, sorry, you're on your own, you have to find your own way through, she can never go to that kind of college and get through without her parents signing off on loans.
Sure.
So what I'm leading up to is the free money that was being given away to all these kids. Is that what caused this? Because then the universities were, hey, we can charge triple the price because now we got
right. So there's quite a lot of discussion as to why it is that college costs have been rising so quickly as they have been. They've been going up by several points over inflation for the last 2 or 3 decades. There are arguments that I'm fairly sympathetic to, that in fact the large amount of student loans that were available to be taken out encouraged the universities to run up their own costs, and especially if you look at the growth of administrative staff, not necessarily teaching staff, but and then building these elaborate facilities like large gymnasiums and so on and so on. But so that's all getting back to root causes, which is an important conversation to have. But in the here and now, what you're left with is college is quite expensive, and in particular, I mentioned how the graduates are coming out of school and not able to find jobs that can service that debt, or many of them, not all of them. So here's a chart comparing. So these are graduates from high school in the age 17 to 20, so 2 or 3 years after they've graduated high school, and the average wage, the average hourly wage that they get. And then here are college graduates. So a couple things to get out of this graph. First of all, again, at the high school level, once you get to about the high water mark around 2000, or flat line around 2000 to 2010 or 2008, wages have actually been declining quite a bit, so that they're now on average about $10 an hour for a high school graduate in the first 2 or 3 years out of school. And then for college graduates aged 21 to 24, the wage, there's been some fluctuation, but again, this is inflation adjusted, and you're seeing not a lot of growth, and in the years after the crisis, quite a bit of lost ground. So that's now on the order of $18 an hour. And then you try servicing your debt on that kind of a salary, it's not very easy. Now, it's interesting that debt, student debt is concentrated among graduate students, those going for master's degrees or professional student degrees. To some degree, that you can explain that by the fact that very often parents are the ones incurring the debt for undergrad students, trying to get their BAs or BSs. And then if you go into grad school, you're expected to sort of front your own way. but certainly you've got a large pool of grad students who are, grad school is quite expensive, I should know. And the other thing is, it's been an interesting thing, but the more schooling you get, the more higher education you get, the more likely you are to be attracted to radical or alternative politics. So you're creating a large pool of grad students who are horribly indebted and are apt to look for something else than the system has provided for them. So again, so again, some of this, obviously if you're going to law school or medical school, you're going to get a large amount of debt, and hopefully you'll be able to pay it off once you're making 6 figures a year. But again, if you look at, if you're going for a doctoral degree or a PhD, you're over 50% of these students take out debt, and almost 30% of that is over $50,000. And then if you look at master's degrees, it's almost 35% of those master's students are borrowing more than $50,000, and that's on top of wages that they use to pay their tuition and everything else. So you've got so ultimately what you've got is there's pain on both ends of the spectrum. The sort of the lower middle class, I would say, is suffering quite a bit, and then the educated young are incurring large costs and then coming out of college and not really finding opportunities to service that, unless you happen to be in a technical field or something like this. So there's quite a lot of, say again?
Even in a technical field.
Right, so.
My son's going through that.
But in order for change to happen like that, the country has to evolve into a place where now we're having more production as opposed to more of the electronic sides or the law sides of things. Because you come out with a degree that's not in those fields, it's going to be very difficult to be able to meet the level of income because we don't have it in this country.
Right, like if you come out as a specialist in manufacturing precision dyes, let's say, they do that in Germany, they do that in China. They don't do that in the United States very much anymore. So having the education, how does that help you if there's no employers? And it's a serious, serious problem. And for the last 2 decades at least, maybe 3, nobody, none of the major party platforms for either party has really tried to address that. And so everybody has the sense that they're everybody, those who are in the affected groups, which is a good chunk of the country, have this sense that their interests are not being represented and they're trying to push for something else. And that's where you get the whole populist upswing. So you can see different flavors of populism at work in the Democratic and the Republican primaries, but the common theme, I would say, between them is that the government is corrupt. It's favoring, the connected interests, whichever those interests may be, depending on who you're talking to, and certainly the banks and Wall Street are major targets of this this populist resentment. I don't like the word resentment because it sounds like it's unjustified. And I don't like the word grievance because that also. Anyway, the anger that's going on. Wall Street in particular was blamed for the 2008 crisis that we went through, and yet it seemed as though Wall Street came out intact. And where's the justice in that when Main Street is suffering? That's sort of the theme that's going on there, and that nobody is trying to see to the interests of these large portions of the population that are suffering. So, in that, yes.
Well, you says themes, but those are all facts. That's all true. It's not a theme. It's true.
Well, what I mean.
Government corruption, favoring the rich, banks on Wall Street, no one looking out below. It's not a theme. That's reality.
So what I mean by theme, it is. There are many things that are true, but only a smaller fraction of them get focused on and get emphasized. And so these are the ones being emphasized right now. You could, in a different era, people could have been focusing on, for example, environmental degradation or who knows what. But right now, environment matters, and there are people who are pushing environmental politics to some degree, but it's taken second stage, I would say, to these issues, and they're shared between both parties. And that's why you're seeing the kind of turmoil you're seeing in both parties. But again, it expresses itself differently on the left and the right. On the left, the feel the burn revolution, so to speak, the emphasis is on building a stronger social safety net, to take these groups that are suffering and trying to support them with increased healthcare subsidies, increased parental leave, higher minimum wage, all these different ways in which you're trying to build up the safety net. Financing that with more taxes on the rich, and yet it's not just about financing the additional spending, it's also in some corners almost punishing the rich or suppressing the rich, because the sense that the rich have gained too much power and you need to beat them down a little bit. And it's that impulse in particular that's going to affect investors, as we'll talk about in a little bit. Breaking up the banks, breaking up or limiting Wall Street firms, because these are the people who got us into trouble in the first place. They're too powerful. They're dangerously large, and we need to see to the health of the system by beating them down a little bit. Free education's another one, especially with regard to higher education. Bernie Sanders came out with his plan to have free college for everybody. Hillary Clinton has tried to follow that with a what was she saying? She was saying something about college education without debt, which is not quite as expansive as what Sanders was saying. And then on the right, in the Republican Party, what you're seeing is there's much more of a sense that the Republican Party is not representing their interests. So there's more anger at the party in particular, and the party establishment. You'll see right now the greatest insult that can be lobbed at a Republican presidential candidate is, well, he's just a tool of the establishment, which is something unusual. So there's a sense, to skip ahead a little bit, there's a sense that many people are supporting Donald Trump more because of the damage that he's going to do to conventional Republican Party elites than for any other reason. So there's that. There's more of a focus on illegal immigration on the Republican side than on the Democratic side, motivated by the sense that those at the very bottom are in direct economic competition with illegal immigrants, because they come in, they compete for the same sorts of jobs, they depress wages, and therefore for the little guy, the sort of blue-collar worker to have a chance, you need to reverse illegal immigration. That's the sense in populism on the right. And actually, it's interesting because Bernie Sanders himself, there's this assumption on the left that expanded immigration is great and we need to do that. And I remember there was an interview maybe a year ago now. Ezra Klein of Vox.com interviewed Bernie Sanders and made an offhanded statement assuming that Sanders was in favor of expanded immigration. Sanders actually came back and said, no, illegal immigration is horrible. It's a Koch brothers plot to harm the blue class worker. We need to restrict all that. Sanders had to walk that back quite shortly because it's become it's not an established or it's not an acceptable opinion to have on the left these days. But he too was sort of voicing this sentiment that illegal immigration is harming the blue-collar worker, and that sentiment has been very much embraced in right-wing populism, I would say. Cleaning up government corruption, there's something that's shared, I would say, between both sides, but it's emphasized more on the right because of this greater sense that government corruption is directly harming them through, for example, higher taxes and so on. And then we think, yes?
Yeah, on the government corruption thing, the Supreme Court is now entertaining a free speech amendment 1 that allows politicians to take money, and that's okay. What's the spin on that? That doesn't make any sense, but it's going forward.
Yeah,
just like Citizens of America went forward.
Yes, well, there are many reasons to to observe government corruption in action right now, unfortunately, and that's one of the things motivating all this. Yes.
No, I understand illegal immigration. I understand, but the thing is that we're saying it's in competition with blue-collar workers.
Mm-hmm.
Would American blue-collar workers be willing to do the jobs that the immigrants are doing? Or would it be an off balance? Now, would a corporation bring these people in at $15 an hour to pick a field? Or
Right.
would the economy would obviously, everything economically would have to increase
Yes.
to meet those levels of expectation.
Oh yes, and so I will skip ahead then and address that issue. Like the whole skepticism of free trade, and I consider movement of peoples to be part of free trade. You know, that you may decide that it's worth paying the cost of limiting these things in order to achieve other outcomes, but from an economic point of view, it would in fact drive up prices for everybody, and we'd have to deal with that. And it's possible that people would not be willing to do that kind of work, and they'd have to find some kind of workaround, which is why many of the political proposals for trying to handle illegal immigration also incorporate some sort of guest worker program with Mexico to basically legally preserve some elements of the status quo. So that's that. And then, yes.
No, just going back to what I'm saying,
Mhm.
when I asked you, what's the thing in Washington in terms of allowing politicians to take money because it's free speech, and is that a thing that looks like it's going forward?
Well, at the moment, I believe that, so the Citizens United case where certain restrictions on the ability of specifically, I don't know if it was corporations in general or just political action committees
Corporations in general.
to donate
Whatever.
to politicians. There had been limits imposed on that, and they challenged those on the basis of free speech, that their right to political participation was being curtailed, and the court had ruled in their favor and struck down those provisions. There's been a lot of anger about that decision since then, certainly on the left. I don't think there's been any move to try to reverse that yet, but we shall see, especially if the composition of the court changes. I'm sure somebody will want to revisit that.
Well, you might, there's just in today's paper about the Supreme Court looking at McDonnell.
Oh, really?
That's, that his defense of taking bribes and stuff was that.
Oh!
That's maybe what he's talking
Well,
about. Because he's taking, is there free speech to give you a bribe?
Yes. Well, I wish him the best of luck with that.
I just want to add a little something, and that is a very high-ranking immigration official in the Southern California area who's now retired explained to me that illegal immigration would be if we stopped it and not have something in its place that's legal, would be a horrific problem, in particular to California, because so many of the illegals at work, the state and the federal government take deductions that they never ask for, and that the governments are highly dependent on that money not being returned.
Right. So you can see now. I mean, so it's things like this. There's certainly. So you can see how the governments in particular have an interest in preserving the status quo or something like it, even when large segments of the populace are opposed to it. Yeah. Yes.
I'd like to, because I run my own business, construction, and I will tell you that when I left the bank and started working construction, I could not get a job in construction because I don't speak Spanish. And they won't hire you unless you speak Spanish because the crew is so, the base person with no training, not, he doesn't have 5 years experience framing or something, they're paid $100 a day cash. That's the minimum. So that's like $12 an hour, and then it goes up from there. So, I think there would be American workers who will fill those jobs easily, if they weren't there. So what I was bringing up was the higher minimum wage, and I sit there and look at it, so if I'm wrong, please tell me. I think it's just a political money grab, and here's why. Higher minimum wage, once you give people $15 an hour, they're no longer below the poverty line, which means that the monies and food stamps and things that you were giving out now they no longer qualify That's more money for these government types to hold on to and spend frivolously. Number two is, if I've got a guy that's making $15 or $16 an hour, now I gotta pay the new guy 15, I can't keep my seasoned guy there, he's gotta go to 20. Again, increasing the tax rules. And then finally, because I as an employer am paying half of those income taxes, I'm also paying more. So it's just a money grab to me by the politicians from both sides. They're gonna screw the little guy because even though they gave him more wage per hour, it's more tax dollars being taken from them, and they're losing benefits.
Yeah.
It's double taxation is basically what ends up at the end
Yeah,
of
well,
it.
that's the way I'm looking at it, but I don't know if I'm wrong. Tell me I'm wrong.
No, that's certainly part of what's going on. I don't know if I should bring this up, but fine, whatever. So San Francisco, I believe, was the city that instituted a $15 minimum wage most recently, and there's some interesting fine print in the law, which is that if you have a union shop, you don't have to pay $15 an hour.
Los Angeles, the same thing.
Los Angeles, same thing.
So the unions are now going to these formerly, non-union shop employers and saying these much higher costs that you're having to pay now, you can get away with it. You can just do away with them as long as you bring in the union. So there's definitely
There also, I work for a company that has a construction department, and we do prevailing wage jobs, which could be from the federal government, the county, or the city. And now one of the governments that work with the unions are coming into private companies and pushing for them to go union. So it's gonna be your electric companies, your gas companies, some of your oil companies, and any time that they have workers who go out and do projects, they're gonna be paid at a higher wage rate, a large higher wage rate. And so that means utility bills go up.
Yeah. Okay, so if we wanted to, we could continue in this vein all night, I think. but let's so you can see just in this room, there's quite a lot of sense that things are not acceptable the way they are, whichever way you're coming at it from. That there's certainly something to object to. So here we are. As again, I wanted to very narrowly focus this presentation on what it means for us as investors, just because if we talk about the entirety of all the candidates' proposals, we could be here all week. So I
We
want
can have more discussion afterwards.
So in what's to come, I want to focus on specifically tax rates, in particular capital gains, transaction rates on trading, which I'll talk about, and just the general fiscal effects of the overall policy proposals of each candidate. And another thing is that, of course, this is all based on the proposed budgets that the major candidates have presented, which most presidents, when they come into office, they never get everything they want, and that's just a given. And sometimes politicians make extravagant promises that they have no intention of fulfilling, but still you can take a look at their policies as presented as their ideal, and you can say, well, what kinds of things are they interested in? Where are they differing from other people? Where are they going to try to push for, even if they don't get everything? So with that starting point, let's begin with some context. So when you're talking budget numbers, it's easy to get wrapped up in billions and trillions and all that, but that eventually the massive size of these numbers, you lose context. And so I like to think about it in terms of percentage of GDP. Historically, the federal budget, by historically I mean the last gross domestic product, I'm sorry, the aggregate economic activity of the country. And over the last 50 years or so, historical spending has averaged about 20% of GDP. Taxation has averaged about 17.5%, so there's been this persistent gap of about 2.5% going back decades. And that's why we have the amount of federal debt that we have. But at no time in our history, actually, has tax receipts gone above 20% of GDP. The last time it was at 20% was in the year, I want to say, I think 1999 or 2000. So it was right when everyone was celebrating we've got we finally got a balanced budget for all of about 6 weeks.
Yeah.
And that's that. So right now, the size of the national debt compared to our total GDP, it's about 74% of GDP. Up until the crisis, it had been hovering around 60 or 65. Then during the years after the financial crisis, it spiked quite a bit because tax receipts went down, emergency spending went up for that period, and now we're under current assumptions over the next 10 years, that debt would increase to about 86%, which is generally viewed as unsustainable. So most of my numbers are coming from the Committee for a Responsible Federal Budget, and which is a bipartisan coalition or nonprofit or what have you that's trying to agitate for more fiscal responsibility. But in any event, the only ways to change this situation are some combination of taxing more, spending less, and getting the economy to grow much faster. You know, if you can get one of those things high enough, or the combination of them in that sweet spot, you can gain more control of the budget. Now, it turns out that none of the 4 candidates I'm about to profile, their proposals actually improve the fiscal situation. The only one that does is Governor Kasich, and I've had some pushback that why isn't he being focused on in this presentation? Well, the main reason is that he's not playing to the populists at all. He's pretty much ignoring them entirely, which is one of the reasons that he's never caught on. But so let's start with Ms. Clinton. So her budget is actually the closest to the budget proposed by President Obama most recently, in the sense of a few relatively minor tax increases for wealthy people. There's the Buffett rule, where if you're earning over $1 million a year, that there's a certain floor of taxation. You would pay a minimum of 30% tax, even net of all your deductions. Yes?
It's different from alternative minimum tax?
It is different from, and I think in addition to. So I'm not sure exactly how it interfaces with the alternative minimum tax, but the basic idea is to ensure that those making a lot of money are paying taxes even with a lot of deductions. Yes?
So you say it's similar to Obama's budget, right?
Yeah, which
So
was not
with
accepted.
Hillary, we can see the market at 18.
Say again?
Spend 18,000. The market at 18,000.
Oh, I see what you mean.
Spent 18,000 under Obama for.
Oh, okay, so
went
you're
from 8,000.
okay, you're talking about the Dow Jones.
Can
Okay.
we expect under this person another, keep it at 18,000?
Well, it would be nice.
Think something's going to happen?
Well, that gets into market prognostication. There would need to be a lot faster economic growth, I think, to justify further increases in the market, because like the market's been pretty stagnant over the last 2 years, I think. Because in fact, I think the latest news was that I forget who it was, but there was an announcement today or yesterday that in fact signs are we're slipping back into recession. So the economic growth is not there to sustain high market values, I don't think. But that's a whole different discussion, and I haven't been complianced for it. So
Okay.
so right. So she wants to put in place the Buffett rule. She also wants to put in place a 4% surcharge on income over $5 million on top of other taxes. Slight increase to the estate tax, reducing the current exclusion of. So if you have a large estate, you're subject to estate tax. You have to pay some 40% of that to the government, but you're able to shield the first $5 million of that estate from taxes. Ms. Clinton would reduce that to $3.5 million. So these are all relatively minor adjustments at the margin that are. I'm sorry?
These tax rates, these are individual tax rates?
Yes.
So this just means we all like set up LLCs or something instead?
Yes, indeed. So that's an important point, which is that you can't view tax rates in isolation because they also change people's behavior. When Carter put a luxury tax on yacht building, it just had people buying their yachts from non-American companies. So the tax itself didn't actually generate much income. It just dislocated people's behavior. And you'll see the same thing happen with any change in taxation up or down, it will affect people's behavior on the margin. And that's actually a pretty good segue to Ms. Clinton's major tax proposal, which is a change in the way capital gains are calculated. So right now, the major distinction there is between short-term capital gains and long-term. Short-term is if you're holding a stock or a bond less than 1 year and then selling it. That's taxed essentially at your income tax rate, your ordinary income rate. If you hold it for longer than a year, suddenly it flips over to the long-term capital gains rate, which is, I think, 20%, depending on your tax bracket.
Or lower.
Or lower, right. So you've got a pretty large cliff there. Now what Ms. Clinton has proposed is actually that gets replaced by a sliding scale. She's the red bar, where every year there's a slight diminishment in the tax rate until you get out to year 6. And at year 6, then it becomes fully similar to the current regime of capital gains rates. And so the effect would be to penalize a lot of trading by raising the taxes on gains. Now, most economists who've actually studied this think that this kind of a tax structure would actually reduce the taxation revenue from the tax, because people would just change their behavior so that they don't run afoul of the tax. So as far as a way to close the deficit, this isn't terribly effective, but what it would do is again, it sort of plays into this sense that Wall Street is running rampant, that speculation needs to be curtailed, and that people's behavior needs to be reoriented toward long-term investing rather than toward short-term savings. So yes.
So is the purpose of that to stop a lot of the what are they called?
Short-term.
The hedge funding and stuff like that, so they're not actually investing in the failure of something?
This particular proposal addresses that tangentially. There's another proposal which I didn't get into because it's a little on the complex side. So right now, most hedge fund managers are paid via a method called carried interest, which is not classified as ordinary income tax, so they're taxed at a much lower rate. Both Ms. Clinton and Mr. Sanders have proposed doing away with that classification of carried interest. And there have been people who argue that there's other beneficial uses for carried interest which would be interfered with, but that's a longer discussion. So they are looking at there are certainly people looking at hedge funds in particular, hedge funds and sort of these private equity funds, and the abuses there and trying to curtail them. So as investors, we would have to, strategies that involve more frequent rebalancing in taxable accounts would have to be reevaluated under this sort of thing. So, sorry?
I'm sorry, I said we all have to go to Ireland.
Right. So that was just a brutally brief overview of Ms. Clinton. So Bernie Sanders. So I said that Hillary Clinton's proposals are broadly similar to those of President Obama. Sanders is actually proposing a much different, much more ambitious proposal, where he's saying that he's going to raise taxes quite a bit, well over the historical norm for everybody, pretty much, and we'll see that on the next slide, up to about 25% of GDP, whereas, again, like I said, the historical standard is about 17.5%, and the historical maximum has been 20%, and increase spending to about 30 to 35% of GDP, depending on how much you anticipate healthcare costs to be during that time, which again is much higher than the historical norm of about 20%. And what this would do, and he's increasing income taxes or taxes in a number of different ways, by instituting a carbon tax, by applying capital gains rates to any appreciated assets you have at death, and that's before you get the estate tax. Whereas now you get the step up at death so that your heirs do not have to pay capital gains on whatever appreciated assets you have. Removing the current cap on payroll taxes. So as it stands now, your income up to about $120,000 or something like that is subject to the payroll taxes for Social Security, Medicare, Medicaid. This proposal would remove that cap, so all the income would be subject to that as well, which effectively is something like a 12 or 13% tax increase on high earners. And there's a few other things which we'll talk about in the next slide. And the net effect of this, depending on your assumptions for how the economy would react to all these, it could increase the debt by 2026 by somewhere between 90 and 140%, depending on how all these things come out. And all these projections have a huge range associated with them just because there's so much instability. So Sanders is now his own campaign argues that in fact, because of the way in which these proposals will make the economy fairer, it will unleash more economic growth, and it will actually end up being a net cut in the deficit level. But most economists disagree. But so they're basically making a gamble that if you transition our system into something more along the Scandinavian model as they understand it, it will result in a better economy. But it's certainly a gamble.
Sounds like the reverse trickle-down effect.
Yeah,
And
pretty
how-
much.
How long would they foresee that taking, how long would it take for that to even to flip things around? I mean,
Yeah. I don't know that they have. I don't know that they
no
know.
projection on that.
I don't know. So, yes.
It's actually a couple of pages back, when you talk about taxes like 17.5% of
Mhm.
GDP, is that individual income tax only, or is that also corporate and customs?
That's everything. That's individual. That's corporate. That's payroll. That's estate tax.
Customs,
Customs. Yeah.
gotcha. Thanks.
The entire aggregate. So here's an example. So the gray lines are current income taxes for the different brackets. The blue lines, pardon me, are what this would look like under Sanders' proposals. And this is sourced from Vox.com. And you'll see how even the lowest tax bracket on the federal level goes from about 25% to 34%, and then the highest tax bracket goes up to 62% from 37. So, again, focusing many of the tax increases on the highest earners, but everyone's going to have to chip in some, according to these proposals. And yes.
Interestingly enough, other than the very highest bracket, the next highest bracket is right smack dab in the middle class where most people are at 75,000.
Yeah, and that has to do with the way the payroll tax. I think that's the main thing, because until you hit that point where income becomes excluded, you're paying the 12% payroll tax on every dollar of your income. As you get progressively higher incomes, the effect of the payroll tax is correspondingly less.
But I thought he was going to do away with it.
Oh well, I'm sorry, but he will, and that's why you see on the. Oh, I see what you mean. Even for Bernie Sanders, yes, yes. And I don't understand exactly what causes that effect. I haven't dug into the numbers quite so much, but certainly you can see that there's a lot more taxes across the board.
So the key is to break that ceiling.
Something like that, yeah.
Every year.
Yeah. So and now for
Too high.
and now for investors in particular, Sanders is proposing to change the capital gains rates quite a bit. In particular for highest earners, you can see. Well, first of all, there's going to be a 2.2% surcharge on all capital gains to pay for certain of his proposals, and that's across all brackets. Whereas currently, if you make very low incomes, you don't pay any capital gains at all. If you're sort of in the middle, your rate is 15% and then 20%. And now Sanders' proposal actually, once you start hitting $250,000, capital gains would be taxed as ordinary income, pretty much. So instead of being classified in a different category, suddenly you're being hit as if those that was income altogether. So that's a very great change in the way that we treat taxation of capital gains. Yes.
Okay, how can he do that? Because regular income, isn't that considered earned income?
Right.
And you don't really earn a capital gain. It's money you've earned off an investment.
Right. So
It's a double tax.
again, this is just a proposal. Were Sanders actually to become president, there would be a lot of pushback. I doubt that this program would be put in place in its entirety. So, but that's a serious question. Certainly for for us on the management side.
One other question, one other point
I mean,
on the capital gains, you know, most people are probably thinking, well, it doesn't affect me, cause, excuse me, everything I've got are in IRAs or I don't have that much money or whatever. If you sell a house, that you're gonna be hit with that.
Yeah.
Yeah, I was gonna ask, because right now, if you sell your primary residence, it's not considered a capital gain.
Well, it is, but you have an exemption.
Right.
So if you
And
sell.
is that exemption gonna go away now with his, we don't know?
I don't know.
So if you sell lump sum stock,
Yeah, that's
it'll
it.
hit capital gains.
Right.
Especially under this, it's gonna have capital gains at a high rate,
Right.
right?
But a lot of people don't think in terms of stock, they say, well, I don't have that much. And then when you point out to them, well, guess what? You know, if you were to sell a house for whatever reason, to buy a bigger house, to buy a smaller house, to move for a new job or, you know, for retirement.
I thought if you bought a new house, you could roll the house and.
No, that went away years ago.
No. So the other proposal that Bernie Sanders has is called a Tobin tax. I don't know how many of you have heard of the economist Tobin. He one of the ideas that's been floating around and has a lot of support among the sort of left populists is this idea where you would charge a tax on financial trades. And Tobin himself wanted a relatively small tax on the order of like, you know, a few hundredths of a percent on a trade. And that would primarily, if you've heard about high frequency trading, this idea that some financial firms are essentially using very, very fast computer networks to generate masses and masses and masses of trades in order to get a few pennies of profit off of each. And essentially it's a legal form of front running, which is a way of basically leeching profits out of the stock market. Is probably not a very healthy thing anyway. So Tobin's proposal would be have a very small tax rate there to just inject a certain amount of friction into that process, make that kind of high frequency speculation unprofitable, and then you can use the revenue to do whatever you want to do with it. Now Sanders is actually saying he's going to push for a tax of 0.5% on a stock transaction. So if you buy a stock and then you sell a stock, you've paid a 1% tax on the magnitude of that transaction, even not counting capital gains. So this is before profits. And then a 0.1% tax on bond transactions. So what this kind of thing does, and he says so explicitly, the goal is to discourage relatively short-term trading and to push for long-term buy and hold strategies. And that would force the financial industry to change a lot of what it does. So for example, if we've ever talked about quarterly rebalancing or yearly rebalancing, which I'm sure you've heard many a time from from your local financial advisor, it would be very difficult to do that in a taxable account now, because every trade you're losing a certain amount of value. So
That would also be though in IRAs and tax exempt.
You're right, actually. I didn't even think about that.
And 401ks.
Yep.
Probably.
But
Yes.
if it's a losing trade, are you still gonna be charged the tax?
Yes.
It's like the city of Los Angeles, even if your business loses money, you still have to pay the tax.
Pretty much. So, and what's animating this proposal is, again, a lot of this animus toward Wall Street and these big banks that have victimized the American economy, and therefore we're going to try to stick it to the banks. And now Hillary Clinton has, getting a lot of heat from saying, well, Sanders is trying to stick it to the banks, what are you doing? She came out with a proposal, I think, in February, that would tax high frequency trades that were canceled, which is a particular method that's sometimes used to inflate stock prices and generate profits that way. Unfortunately, this proposal is very vague in its scope and probably very difficult to implement. My read on this is that it's strictly red meat for the voters, and that it's meant to sort of head off the thread of Bernie Sanders and say, see, I'm doing something too. But you can see that even Ms. Clinton is being forced to acknowledge this anger toward Wall Street and this push to make them pay. And that's something that we as investors are going to have to deal with in the future, no matter what happens this election. Yes?
Bridget, back on the capital gains tax that he's changing that. So I'm retired now and I'm 70 years old and I'm starting to pull the money out and use it, but I've got these gains. So am I, now that I'm retired, no income, now I'm paying also the capital gains on that?
I believe so, because if you're pulling out of an IRA, that's considered income,
Yeah.
I think. So I
You've already
think,
paid the tax going in, now you're gonna pay it.
right,
a higher rate.
I think the answer is yes.
Yep.
I think so.
You're talking about a taxable account.
And it's-
Yeah, it's a lot.
Oh, okay.
So you pay the
Oh, so I see.
transaction fee plus
So,
the-
Do we
Plus
have to
your
do
higher
It's
tax
so
rate.
with the Roth IRAs, it's not gonna be affected there?
Retired person,
Okay, so if
20%.
you've got
Now
that,
it's gonna
that trading tax, it will be effective.
It'd still be affected.
Yeah, and there's actually a push among some, Democrats right now. Actually, it's coming from the administration, to do away with the tax-free income there's a lot of
Roth?
changes being proposed to the Roth IRA. Most of them at this point are dead on arrival, just because there would be a huge backlash. But they're trying to take away some of the estate planning, attributes of Roth IRAs
right, and
that are gaining traction.
And again, if you sort of step back and see the broad context is we're spending more than we're taxing consistently, and something has to be done to make up that gain. And on the left, the major impetus is not to reduce spending, but to increase taxation in some form. Yes?
Okay, I have a question on this Tobin tax.
Mm.
Does it also affect retirement plans within a company, you know, within a
I
corporation?
believe it would,
Yes.
yes. I believe it
Okay,
would.
so pretty much the populace is shooting themselves in the foot.
Well, more than that, I believe from my reading of this, it's not just the individual. If you're rebalancing your mutual funds, it's even within the mutual funds.
Hmm.
Mutual funds, that was an individual.
So your expense on those
So,
funds, expense
Yeah,
is
your
gonna go
fund
up.
expenses would go up because, you've got these professional money managers in the mutual funds that are buying and selling stock, right? And if they're paying a 0.5% every time they're buying or selling, that's gonna hugely affect your investments.
What would that do to the market? Right now the
Very
market goes up
probably-
and down, like flatline.
Very probably it would reduce the level of the market, I think, but it's hard to tell just because we used to have taxes like this until about the 60s, but as far as analyzing what the effects of the tax versus other factors in this sort of thing is difficult to tell. I will say that at times when there were these sorts of transaction taxes, often what it would do is financial firms would find ways to get around it. So for example, in turn of the century Germany, they used to have this kind of a tax. So instead, large banks would hold massive amounts of securities in trust for their clients, and then rather than buy and sell securities on the open market, they would just sort of rearrange between the accounts of their own clients. And so so that had two things. Number one, they evaded most of the tax. But number two, it also concentrated control in the very large banks that theoretically were trying to take control away from. So again, it's these sort of knock-on side effects to these taxation proposals. Yes?
Has either of these two done anything to attack the large banks and investment houses on their fees? So the Investors Business Daily a week and a half ago had an article, 2015, the large banks and investment houses, just in fees, not in commissions and things, charged over $12 billion.
So I know.
And those are just fees. So that's what I would like to see.
Yeah. So I know Bernie Sanders has advocated breaking up the large banks. I assume that the intent of doing so is to inject more competition into the system, which theoretically would reduce fees and so on. So unfortunately, we do have to move on. So we've talked a lot about the Democratic side of things, and now let's start with the Republican front runner. Yes.
Please
This is a very odd election cycle because 6 months ago, everyone was expecting Jeb Bush to run away with the nomination because he had the most money, he had the name recognition, he had the support of all the party insiders, and yet he was totally blown away. And that shows you the amount of anger going on both sides. So now the real front runner, at least for right now, Donald Trump. It's hard to score his proposals to the same degree of detail as the other candidates because many of his proposals are sort of broad outlines. That said, the Committee for a Responsible Federal Budget has scored what they could, and so we said how on the left the general answer is to try to raise taxes, use those taxes to pay for more social spending and benefits and so on like that, and in that way make the economy fairer. On the Republican side, the shared theme is lower taxes, get rid of a lot of the corrupt sort of exemptions that are built into the tax code to favor particular companies, make the system fairer that way, and hope that the additional economic growth will counterbalance the loss of income. But again, that's a very difficult, it's very difficult to expect that kind of thing off the top. And so, for example, Donald Trump's proposal, he would lower taxes quite a bit, and in response, the debt would grow to anywhere between 115 and 140%. So the top line, or the highest estimate is similar to Bernie Sanders. The lower estimate is quite a bit higher. Trump would reduce the corporate tax rate from 35% to 15%. Right now, our corporate tax rate is, I believe, the highest in the world, and that's one of the reasons you're reading about all these corporate inversions where people set up in, the Caribbean or Ireland, where the tax rate is, I think, 12%. But again, you're eliminating many of the deductions from the corporate taxes. So more corporations would actually pay the 15%, as opposed to nominally paying 35, but actually paying something more like 20 or 15 anyway. Yes?
But isn't he also proposing that businesses don't go outside the United States?
Yes, he is.
Otherwise they'll be penalized?
Right, and how exactly he would institute that is an open question, and it doesn't really enter into the analysis here, just because it's so broad.
I'll bring in Jack.
Yes?
All this seems to be making government bigger, right?
Well,
No?
so this isn't addressing spending. Spending under his proposals remains about the same because he's talked about reducing waste and fraud, which everybody does. And if he would actually be successful, that would be one thing. But in general, he hasn't pointed to particular programs he wants to cut. So spending would remain about the same. So the capital gains and dividends would be taxed at about 20%, which is similar to what it is today. And then on the individual income tax, he would lower marginal tax rates for pretty much all brackets. So zero tax rate up until $50,000, which is higher than today. And again, the taxes further up would keep going down. So again, you're reducing tax revenue quite a bit and hoping that economic growth makes up for it in order to keep solvent. So that's Trump's plan. So again, while left populism says increase taxes, increase social services, increase social safety net, right populism says, the certain connected corporations are able to get massive exemptions and are making the rest of us pay for it. Therefore, lower taxes on everybody, remove most of the exemptions, and things will be better. That's that.
And what about the social programs?
Trump has not pointed to particular changes he would make in the social programs. In particular, he hasn't said anything about changing Social Security or changing Medicare. Now, Cruz is, as far as policy, his is the most aggressive change, or proposal, I would say, which is why his proposal would increase the debt, either, depending on the range of assumptions that you use, either it would be about 84% of GDP, which is similar to what it would be in the status quo, or it would be as high as 163% in 10 years, depending on how some of his proposals work. So, and that, again, that's largely because of tax cuts. He wants to, quote unquote, abolish the IRS, which nobody's quite sure what exactly that means because you'll need somebody to collect taxes, but certainly he wants to radically change what you have. he's proposing a flat 10% rate on income, dividends, capital gains, and eliminating the death tax. In return, you're eliminating many of the deductions that we enjoy, so you would still be able to deduct mortgage interest, the earned income tax credit for those who have that, charitable contributions, and a child credit. And those would be the only 4 deductions for individuals. And he would replace 401ks, IRAs, the whole thing with a universal savings account where you could contribute $25,000 a year and then withdraw it at any time for any reason. So it would grow tax-free while it's in this account, and then it would get taxed when you withdraw it. And I personally think that's a great idea. It's actually something similar to what I had written up in a white paper I wrote for R Street just last month, which you can read on the rstreet.org. No, RS Institute. I'll find it. It's R Street Institute, and I wrote a paper about re-envisioning retirement for the gig economy, just to put a little plug in there. Now, I say it's a 10% tax on income. That's kind of cheating, because really, it's a 10% tax plus the corporate rate, because now he's proposing to totally change the corporate rate to not taxing profits, but rather taxing business surplus. So essentially, it's a consumption tax, similar to what you have in Europe. And how that would work in practice for is, let's say you, in the current law, if you're making $43,000 total compensation, so gross, then $3,000 of that gets taken out for payroll tax, so you're left with $40,000 flat. The employee pays another $3,000 in payroll tax, so you get $37,000 in take-home pay. Then you pay your income tax on that, and you're left with $33,000, give or take. Now, under Cruz's plan, total compensation 43, no payroll tax because he's abolishing it. He wants to replace Social Security with private accounts. And then this value-added tax is applied to the whole thing. So about $7,000 comes off of that. So now, the cash wage is reduced to about $36,000, and the 10% rate is applied to that. It would still end up as slightly more income, about $1,000 more income than under the current plan, but it's not like you're only paying 10%. Really, you're paying 10% plus 16%. So that would be everybody. And the hope there, the gamble there, is that by radically restructuring the tax code this way, you're going to generate a lot more economic activity. Yes?
So that 16% that I pay each time I buy something at the store, like a value-added tax, or is it 16% right off the top that they're taking?
That's one of the questions that nobody quite knows the answer to, because it's vague in the proposal, and that's one of the reasons why the range of GDP, debt to GDP estimates is so large. So until you get more,
change people spending that.
yes, it would.
That's right.
So it's certainly a radical change from the way we've done business before, and it's unlikely to actually be put in its present form, just because there'd be a lot of pushback, and the American political system doesn't like large change. So, but that's, yes?
So how would he get rid of the Social Security? What would he put in place?
I believe current savers 50 years of age and above would keep the current system. Those who are younger would have the option of private accounts, I think that's how it goes. And so I know we've covered a lot of ground over the course of this presentation. Yes, but just to give you an idea, both of these, these two different policy proposals are two totally different ways of responding to the same general set of impulses, which is to say that this populist impulse that certain well-connected classes within our society are victimizing the rest of us, and we need to somehow redress the balance, whether that's by increasing taxes on the wealthy and using that money to fund social programs, or trying to flatten out the tax code for everybody and hoping for more economic activity in general. All four of the major candidates in this cycle, sorry Kasich, are trying to respond to that populist impulse. And no matter who wins, we as investors are going to have to be on the lookout for changes in the laws in those directions for quite some time to come, because I don't think the populist moment is ending anytime soon.
So,
yes.
Investors will need to find ways to skirt around, as they did in the past, to be able to lower the ratio.
Very possibly. I mean, that's the trick. Anytime you raise a tax somewhere, people are going to try to get away from it, and so the question is, you know, what options are there, and how easy is it to make use of them, and how many people are going to want to do that? So, are there any other questions? Yes.
Basically, none of these proposals will work.
Right. The likelihood that any of these proposals is going to survive intact and be put into law is essentially nil, no matter who wins, just because that's the way politics works. But still, you can see how the trajectories of each are wildly different. You've got Hillary Clinton, which is pretty much what we have now, with a few tweaks at the top end for taxing high incomes. You've got Bernie Sanders radically trying to restructure the government's relationship with society toward a more idealized Scandinavian direction as he sees it. And then Trump doing these sort of relatively incremental tweaks toward lowering taxes on his end, and then Cruz just essentially trying to overturn everything and make everything very flat and simple. Yes?
So with the flipping of the complete restructuring of everything that we have, it still goes through the House and the Senate.
Yes.
So therefore, is that even real?
Right, and so...
Executive order.
Well, if any Congress allowed major changes in the tax code by executive order, they should all be, you know, sent on a boat and sunk in the Arctic or something. But certainly, you know, any president who gets in will try to carry out his or her legacy platform to whatever degree possible and desired. And you can sort of see, even if these proposals don't get implemented, the ones that will get implemented might have some resemblance to these, even if not to the same magnitude. Yes?
So I got a question with regard to the same question in the sense this. Who's running for Senate and Congress? And are we getting populist movements there too, or is it just the president?
Now that depends whether who wins the election, correct? Because
Right.
that influences the flip over on the House of Representatives and the
Right,
Senate.
that's exactly true. But my point is there a populist movement in the people running for the Senate and for the House?
I think not as much, just because Trump especially took everybody by surprise. Everyone was anticipating it would be, you know, Jeb versus Kasich versus something. Maybe Rubio. And certainly Trump and Cruz, everybody was expecting they would flame out. So on the Republican side, I don't think there's quite the same kinds of candidates who stepped forward and ran. On the Republican side, maybe, because the progressive movement has been strengthening quite a bit. Did I say Democratic or Republican?
You said Republican.
I'm sorry, on the Democratic movement, on the Democratic side quite a bit, because the sort of Elizabeth Warren wing of the party has been growing quite a bit in recent years, and they're actually hoping that she would run. And I think she made a mistake in not running, because she could have defeated Hillary quite a bit, very easily, I think.
I agree.
But that was her decision, I suppose. Yes?
I was going to say, as this gentleman pointed out, that it needs to go through the Congress and the Senate, but it doesn't really matter if it's a Republican president or a Democratic president, because even if it's a Republican and the House is Republican, it doesn't mean that they'll accept the change if it isn't a
Right.
benefit to their own pocket.
That's right.
That's certainly
Same
true.
with the other party, if it's gonna hit them in the pocket. So what's the likelihood of
Right.
any of these passing?
Well, I'll give you an example. So back in 2005, President Bush the Younger was in office, and he had a Republican House and a Republican Senate. And at that time, this was right after the 2004 election, he came out with a mandate, he said, and he had made a big push that summer in 2005 to try to restructure Social Security and implement some sort of private accounts for Social Security. And with a Republican House and a Republican Senate, it died a glorious death. Because many of the congressmen and senators didn't want to risk their own re-election by supporting it because it seemed too radical. Probably we'd get something similar here until we don't, because very many people expected the Affordable Care Act, Obamacare, not to pass the House and the Senate, and yet somehow it passed. In an adulterated form, because they had to make major changes in the law to get the support of certain senators like Joe Lieberman. But yes.
So I think what you're saying is that these proposals, even if they don't go through as is, they're getting these ideas in front of the American people. The American people are in a mood for change. This could inform what happens in the future.
Yes.
Even though it won't be exactly what we're seeing here.
Exactly.
My question is, how many of the American people are actually looking this in depth into this?
Very few, I would say.
3%.
Have you watched the elections lately?
Yes.
And Patty.
Right. That's yes.
So, if you can explain, I'm having a hard time understanding all this animosity towards banks and Wall Street. Because, so if you can explain, because in my mind, it's like, okay, you look at the whole pool of money that's invested, I've got to, and maybe I'm totally wrong, the majority of that is all our money, is our retirement plans, our stuff. How much is really, you know, are the banks and everything in Wall Street making on these hedge funds and all that kind of stuff?
Right.
Is it the majority?
So
I'm
part of
seeing things here that it's like you're trying to solve a problem, but you're hurting
right.
the people.
So part of this animosity, I would say, well, for one thing, banks have been distrusted for hundreds of years,
Yes.
and a lot of that plays into that. And there's a sense that, in particular, you know, banks that profit on other people's misfortune, and so part of this was that many people were making bets that a lot of these mortgage packages would fail, and therefore they were profiting off of other people's misery. And even though there are good reasons to have this kind of thing in a market, it still generated a lot of anger from people inclined to be angry about such things.
Well, a bailout.
But there wasn't.
And then the bailouts was a major thing. So whereas the American manufacturers and the automakers seem to be given very onerous terms for getting rescued, or even if they were rescued at all, and while individuals who were behind on their mortgages largely were not helped, at least not. President Obama, when he came into office, instituted the HARP, which was a minor move in that direction. But in the large scale, there was not a real bailout toward Main Street, so to speak, and yet the major financial firms got large amounts of money to stabilize them, even though it was loans, even though they paid them back, even though AIG, for example, had much of its stock diluted and suffered quite a lot of financial loss from that whole process.
And the government made money on it.
Yes.
Yeah.
Even though all that happened, the perception was that those who were connected were able, the phrase which was being used was they get to privatize gains and socialize losses. And that got a lot of people angry, and partly because, again, it's sort of this traditional distrust of the banks and of capitalism in certain circles. So a lot of that is going on also. But on the other hand, it is true that the size of the financial sector relative to the rest of the economy has gotten quite outsized. If you compare the size of the financial sector versus other sectors in the stock market, I think the banking sector made up over 25% of the S&P 500 in 2008, which seems very unbalanced. But that's a long policy discussion.
And what about those quintiles, the people who are going straight? They're mad.
Yes, exactly. And there are a lot of the people motivating this discussion on each side. Those who were left behind in this whole economic dislocation that we're having. Although I think I alluded to this earlier, but I think free trade is not the major problem that they're having. Free trade and immigration. A lot of it is the way in which automation is competing for jobs, and also the way in which we can now make use of services even across. Like I myself personally, I published a kids book, so I got illustrators from Greece and Israel, and I used a layout editor from Australia. So that whole process was done via the internet, using all these professionals from all over the world, none of whom were American. And that's something that's replicated, you know, at all levels of business and all levels of the economy, all over the place.
And the book was printed in?
Well, I was thinking, well, probably, yeah. Yes.
So, let's see.
Cynical laugh.
90, I'm guessing, 95% of the stock market is credit unions, banks, corporations, and 5% is us. Is that about right?
In terms of investors or in terms of?
I don't.
stock?
That seems.
And it's buying
I don't think it's that.
investing in
I don't
stock.
think it's that excessive. Just because many of the
60-40.
pension funds and so on are also investing, and they're investing for the benefit of their people.
But I mean,
So,
how much what is it?
something like that. Unfortunately, so thank you very much. This is, I mean, there have been great questions. We've gone quite a bit over, I think, where people may have been hoping to get out of here, but I hope this has been a very useful session for you guys, and I hope you understand what's going on in our politics.
And Oren will be here to take individual questions for the next
2 hours.
My rates are very reasonable.
Oh, there we go.
From Wall Street, 1,000 an hour.
Sure. Well, thank you very much.